Welcome to today's Explainer. Look, if you're sitting in a high school classroom right now, you are literally about to step onto the playing field of adulthood. And, spoiler alert, they do not hand you a rule book along with your diploma. But that's exactly why we're here today. We're handing you the ultimate survival guide to beating the financial game of life. By the end of this Explainer, you're going to have the exact cheat codes you need to win the whole shebang. So, let's get into it.
So picture this for a second. Imagine you just had a seriously hard month at your part-time job. Just slaving away flipping burgers. Your phone dings. You get an alert that you've been paid $2,000. You're absolutely thrilled. But wait a minute. You look at the breakdown, and your actual bank account only got $1,456. What gives, right? You check your pay stub and see all these missing slices: federal income tax, state tax, Social Security, Medicare. Welcome to the modern ritual of adulthood, where you give away a massive chunk of your hard-earned money to invisible forces before you even get to touch it. And get this, society expects you to just smile and say thank you.
Okay, let's dive into this and reveal our syllabus for demystifying these totally intimidating financial traps. We've got 5 levels today: the price of adulthood, where does your money go, the invisible money thieves, your adult report card, and finally, the ultimate wealth cheat codes.
Welcome to Level 1, the price of adulthood. Let's see what it costs just to play the game.
Now, before we complain too much about losing our dollars, we kind of need to realize something crazy. Currency isn't actually real. I know, right? Humans literally just invented money to make trading and organizing society easier. If you think about it, there's no inherent legitimacy between a dollar bill and like a stick you find in the woods. The only reason a dollar bill can buy you a video game and a stick can't is simply because we as a society have collectively agreed that a dollar bill has value. It's an entire social construct built purely on shared belief and trust.
And hey, since society runs on that shared belief, well, society also has to be funded. That brings us to taxes. Look, taxes are simply the cost of civilization. They pay to build the roads you drive on, they fund your schools, and they make sure your favorite local taco truck isn't, infested with rats. There are a few main ways the government actually collects this money. Income tax, that hits the money you earn. Sales tax hits the money you spend at the mall. Capital gains hits the money your investments made. Then there's Social Security, which is basically the government forcing you to save for retirement right now so they can pay it back to you way later down the line. And finally, Medicare, which helps pay for healthcare for older or seriously ill people.
Let's move to level 2 and see how this builds. Where does your money go? All right, so once you get your after-tax paycheck, what actually happens when you deposit it? You might think you just walk into a bank, hand them your cash, and it just sits there in some giant vault being guarded by a fire-breathing dragon. But in reality, banks are really just middlemen. They use this system called fractional reserve banking. Basically, when you deposit $1,000, the bank only keeps a tiny fraction of it in the vault. They take the other $900 and lend it out to someone else who, maybe wants to buy a jet ski. And this whole system works perfectly fine because we don't all show up at the exact same time to withdraw our money. Well, unless everyone panics at once, like in the massive 2008 financial crisis. Now, you might be wondering, how does the bank make money doing all this? They do it by charging something called interest. To put it simply, interest is just money's way of charging rent to exist in someone else's hands. If you're borrowing money, interest is the painful price tag you have to pay for using someone else's cash. But on the flip side, if you lend or save money with the bank, interest is the really sweet reward you get for being patient. There are 2 main flavors of this rent. Simple interest is just a flat fee for borrowing. Pretty straightforward. But compound interest? Oh man, that's where things get wild. Compound interest means every dollar you have right now creates clones, and then those clones also start demanding rent. So if you owe 20% interest on a credit card, compound interest is working against you. It can literally turn a $12 burrito into a $50 regret. No way you want that, right? But on the flip side, investing at a 7% compound interest rate, that is like an absolute cheat code. Your money basically duplicates itself over time until you wake up old, rich, and, let's be honest, maybe just a little bit smug about it. All right, moving on to level 3, the invisible money thieves. Okay, so now that we know how your money grows, how does it shrink? Have you ever bought a bag of chips, opened it up, and realized it costs like 30% more than it did a few years ago, but the bag looks half empty? Yeah, that is inflation. Inflation is when your money slowly gets less valuable over time. It's this quiet, slow erosion of your dollar's purchasing power. But what actually causes it?
Well, a lot of times, it just boils down to basic supply and demand. Imagine everyone suddenly has a bunch of cash. If 2,000 people want to buy a new TV, but businesses only have 1,000 TVs actually available in stock, what happens? The businesses are obviously going to raise their prices. Supply chain hiccups can cause this too. When inflation gets a bit too high, the government actually steps in to fight it by raising interest rates. This is absolutely crucial because it makes borrowing money much more expensive. So people have less money to spend on things like those TVs, which cools off the economy and stabilizes those skyrocketing prices. But here's the catch. Sometimes cooling off the economy leads straight into a recession, which is basically when the economy shrinks for at least 6 months. Think of the economy kind of like a massive party. In the boom phase, the music is blasting, everyone's dancing, having a great time. At the peak, the lights start to flicker a bit. Then comes the bust phase, the recession. The DJ starts playing sad lo-fi beats, layoffs hit, and everyone just completely stops spending. But remember, recessions aren't forever, right? They are just painful resets. Eventually, we enter the reset phase. Spending returns, businesses rebuild, and the party slowly starts ramping back up.
Now for level 4, your adult report card.
So the crucial point is that surviving that economic party requires you to have good standing in society. And the main metric for that is this 3-digit number, your credit score. Ranging from 300 to 850, this one single number decides whether you can easily get a house, buy a car, or if you'll be slapped with a totally soul-crushing 27% interest rate on a loan. If you're sitting below 580, lenders basically see you as a walking red flag. But if you're over 750, you are sparkling with adult credibility.
But how do they actually calculate it? Well, lenders use this kind of shadowy algorithm to figure out how much they can trust you to pay them back. And get this, it isn't about how much wealth you have at all. Payment history is actually the absolute biggest factor. Do you pay your bills on time? Next up is credit utilization, which just means how much of your available credit are you actually using right now. They also look at credit age, like how long your accounts have been open, and your mix of different loans. At the end of the day, it is entirely a game of trust.
I love how this quote perfectly sums it up. Your credit score is like a pet dog. Ignore it and it poops all over your life. It's so true. Take care of it, feed it, and it will eventually help you buy a house. You could literally have zero debt and still have a totally trash credit score simply because you don't have a history of borrowing. The game is absolutely rigged for sure. But if you learn these rules, you can rig it right back in your favor.
And that brings us to the final stage, level 5, the ultimate wealth cheat codes.
Okay, we know the traps and we know the thieves. Now, how do we actually build an empire? Imagine picking up a regular rock from the ground. It's just a rock, right? Now imagine that rock is shiny and yellow. Bam, it's gold. And this brilliantly illustrates a key point. Gold isn't inherently worth more than a regular rock, it's just worth more to humans because we place a higher value on it. Understanding this human perception of value is exactly how you become rich. If you provide immense value, like say Steve Jobs did with the iPhone, millions of people will gladly hand you thousands of dollars. Simply put, create massive value and you create wealth.
Once you earn that money by providing value, you absolutely must invest it so inflation doesn't secretly steal it from you. Here is your investment arsenal. You can buy stocks, which are just tiny ownership slices of companies. You can buy bonds, which is basically you acting like the bank and loaning your money out for interest. You can buy funds, which are giant collections of stocks and bonds so you don't have to stress about picking them one by one. Or you can buy real estate, which is property that someone else pays to live in. Now yes, investing definitely has risks, but the biggest danger in life isn't the stock market dropping. It's keeping your cash stuffed in a shoebox while inflation slowly robs your future self. But to make all of these investments truly explosive, you need one highly specific ingredient. Let me ask you this directly, especially those of you currently sitting in a high school classroom. What do you think is the most valuable asset in the entire world? Is it gold, real estate, Bitcoin? Actually, scratch that. It's none of those. It is time. And you know what the best part is? As young adults, you have a massive, unmatched supply of it right now. Nowhere does time work harder than in investing. It literally takes modest, totally average paychecks and, through the absolute magic of compound interest, multiplies them into 7-figure retirement accounts. Now, what's really interesting about this slide is this reality check. Wealth isn't built in days, it's built in decades. Most ordinary people who end up wealthy didn't invent some crazy app or win the lottery. They didn't even really beat the system. They just used it. They put a little bit of money into the market consistently, and they just stepped back and gave compound growth 30 or 40 years to do its magic. So, you now officially have the cheat codes to the game of life. You understand taxes, interest, inflation, credit scores, and the ultimate superpower of time. So, I leave you with this one provocative question to think about. Are you ready to let your money clones start paying you rent? Thanks for joining us on this explainer, and we will catch you next time.